it was interesting because when we first sort of had these topics and different shops would publish their Black Swans, which I always found challenging because if by definition a Black Swan comes out of nowhere, how could you possibly publish a list of 15 of them, right? So we said, let's call them gray swans because they're not the likely scenario, not the first case, but things that perhaps are foreseeable and to look at. So I think I'll maybe give you two examples, a good one and a bad one. On the more negative side, I think that as I mentioned earlier, we're pretty constructive on credit. We think that given a reasonable economic market backdrop, default is not a big concern for us, neither in investment grade or high yield. But we are very mindful about the amount of debt that consumers are having on their balance sheets. We are very mindful in terms of the level of government balance sheets. And so, we come out of the GFC, which was caused by a variety of different forms of debt and extension of all of that, and we've just sort of shifted it from one part of the market to the other. And I don't think we haven't fully solved that problem yet. So, you take China, for example. Average Chinese consumer now has more debt than the average American consumer, right? Given a country that's particularly known for its spending, right? That's a concerning fact. And so one of the gray swans that we look out there for is, could we start to see that credit scenario start to unravel quite a bit? We saw a Chinese bank get taken over here recently because of their balance sheet mismanagement. So, those issues are out there. Never mind the European banks. That problem hasn't fully been solved yet. So I think there are a couple of different things out there that could cause a potential credit trigger that may not look exactly like the GFC, but it might rhyme, right? So that's one that we've sort of put out there to be mindful of. The flip side, a positive one, might be European recovery, and might that economic growth rate pick up faster than everybody expected? And this one we haven't seen this one come out yet, but to the extent that we look at a market like European equities, which are arguably very cheap relative to other markets in the world, the challenge is what's the catalyst to see that cheapness get realized? And people are expecting pretty poor returns out of Europe from an economic growth perspective, and that has been priced in accordingly. If that were to actually show a bit of a higher pickup, that actually would be a pretty powerful catalyst for European stocks. So that's a good news one. The credit one's a bad news one, but neither of them are out of the realm of possibility, just not our base case.